Hello everyone, this will be the final part of the RBI Circular July 2025. We have already released the part 1, this is the part 2 and the final part. So the agenda for today's classes, obviously we'll be doing an in-depth discussion related to the RBI Circulars. Then we will be moving to the MCQ Practice as well. So on some of the circulars we will be doing MCQ Practice. Plus July 2025 RBI Circular, I'll be giving you guys a quick revision for the part 1 at the end of this session. So session के last तक बने रहिएगा. Let's start with RBI investment in AIF direction 2025. Very important. High chances you can get one question from this particular circular in your examination. So what is alternate investment fund? It is nothing but like a mutual fund only, where AIF collects a pool of money from the investor and invest in non-traditional assets, not like mutual fund, stock and bonds, but high risk and high return asset. In India, we are having certain classes of investment like mutual funds, like SIF, which is newly proposed investment class, PMS and AIF. AIF is the one which is on the top with minimum investment threshold of 1 crore. Let's try to understand the case first and then we'll be discussing about this circular. If you are able to understand this case, you will be able to understand this circular. So let's suppose a regulated entity like HDFC Bank has given a loan to a debtor. So I have taken a loan from HDFC Bank. I'll be debtor of HDFC Bank, right? I'll be debtor company for HDFC Bank. Now HDFC Bank has also invested in AIF, and this AIF has in turn again invested in my company. So this is the arrangement basically. So this AIF has again invested money in my company in the form of loan. So can I say that I'm obtaining loan from HDFC Bank directly as well as indirectly, right? Directly I have taken a loan from HDFC Bank. Again, HDFC Bank is giving me an indirect financing via an alternate investment fund. So because of this, there can be evergreening of loan. What do you mean by evergreening? Directly I'm taking loan from HDFC Bank to a maximum limit. Now if the regulated entity cannot give me more loan because of certain kind of conditions internally, they can still give me via an AIF. So to prohibit this kind of arrangement, so to stop this kind of arrangement, RBI has proposed the AIF investment directions, right? So we already were having a draft direction. RBI has recently released the draft direction, and now this is a final direction. Very important for your examination. So do not miss this particular video till the end. This is effective from 1st January 2026. Very important. Date is important first of all. 1st January 2026 se this will apply. Okay. There are few definitions like debtor company, equity instrument. So if the dealing is in equity instrument, then this particular direction won't apply. There should be a debt arrangement in the form of either debentures, bonds, or directly a loan, right? So equity means any kind of equity shares plus compulsorily convertible preference shares plus compulsorily convertible debentures. So preference shares and debentures that are compulsorily convertible into equity will also be called as equity instrument for the purpose of this particular direction, right? Debtor company, who is the debtor company? I am the debtor company here, right? Regulated entity is HDFC Bank. This is the regulated entity. This is the AIF, and I am the debtor company. Why I am called as debtor company? Because HDFC Bank has given a loan to in my company, so definitely I'll be a debtor of HDFC Bank. So this is the basic arrangement, and on which entities this particular circular will apply. So this will apply to commercial banks, including the SFBs, small finance bank, local area banks, and regional rural banks. It will also apply to urban cooperative banks, state and central cooperative banks, AIFI, all India financial institutions, NBFCs पे भी लगेगा, including the HFCs. Okay. Now RE's investment policy must clearly include provision on AIF investment. So if you are a regulated entity like HDFC Bank, you need to have a clear investment policy, including the provisions on the AIF investment. What is the limit? There is a particular limit which has been introduced in this particular circular. If you are an individual RE like HDFC Bank, you can invest up to 10% of the AIF corpus. Let's suppose the AIF corpus is 100 crore. You can invest 10 crore of 100 crore. That means up to 10 crore you can invest then in this particular AIF. However, if you are collectively investing in a regulated entity, all the REs like maybe HDFC Bank and Axis Bank are together investing in the AIF corpus. So aggregate limit is 20%. That means in this particular case, if the AIF corpus is 100 crore, the limit will be 20%, that is 20 crore. Subordinated units. If the investment in the subordinated units is there, it must be fully deducted from the tier 1 and tier 2 capital. Let's suppose the regulated entity has invested in subordinated units of AIF, then in that case you need to completely deduct that thing from your tier 1 and tier 2 capital. It's clearly written here, and this is also important, so you need to remember these limits: 10%, 20% and deduction of subordinated unit investment from tier 1 and tier 2 capital. Why we are deducting it? Obviously subordinated capital is a highly risky capital. Okay, so as the name says it all, this is subordinated, this is below the ordinary activity, ordinary capital. In case of any losses, this particular capital is having the least chance of getting a recovery. So that's why RBI has clearly stated to deduct it from the tier 1 and tier 2 capital. Limits on the investment and provisioning. If I talk about the provisioning, then if RE contributes to more than 5% of an AIF, if the RE has contributed more than 5% of an AIF corpus in the debtor company, and AIF is again in making investment in the debtor company. Let me just simplify it for you. Let's try to understand this particular provision. Let's suppose HDFC Bank has given me a loan, and HDFC Bank has invested in a AIF as well. The corpus of AIF is 100 crore, and HDFC Bank has invested, let's suppose, 6% of the corpus. That means 6 crore. That is more than 5%. Now, if this AIF has also invested in my company in the form of debt instrument, if this is the arrangement, then HDFC Bank, whatever HDFC Bank has invested over and above 5%, that means 1 crore, up to 5% means 5 crore. So HDFC Bank has invested up to 6 crore, that means 1 crore is additional here, right? So HDFC Bank has invested 1 crore more. In that case, HDFC Bank has to create 100% provision in case of this kind of arrangement. So, but you told that the limit is 10% and 20%. That is the limit. However, that is the total limit, irrespective of the fact whether AIF is invested in my company or not. That's the total limit for the RE. If this is the arrangement, then whatever HDFC Bank has invested over and above 5%, it is subject to 100% provisioning. Okay, it is subject to 100% provisioning because this is a downstream investment. This is a downstream investment. RE is investing in AIF. In AIF is again investing in the same debtor company in which a regulated entity has already investment, so have made an investment. So this is a downstream transaction, right? So in case of downstream transaction, the limit is 5%. You can go above the limit as well, but it is subject to 100% provisioning. Okay, so I've given an example as well for better understanding for you guys. And whatever existing rules and regulations are there, obviously they are consolidated in this particular direction, and from now this direction will apply, right? Next is related to formation of a new district in the state of Arunachal Pradesh, assignment of lead bank responsibility. So whenever we are having new district, there is a lead bank appointment as well, assignment as well. So here we can see that in the first district SBI, and in the second district as well SBI has been assigned as a lead bank in Arunachal Pradesh. Not so important for your examination. Next is inclusion of Devgiri Nagari Sahkari Bank Limited, Chhatrapati Sambhaji Nagar, in the second schedule of the RBI Act. So this particular bank is being now a scheduled bank because it is included in the scheduled bank, and same case with the Ahmednagar Merchant Cooperative Bank is now a second scheduled bank in the RBI. So definitely it is now allowed to get all the benefits which are there for the scheduled banks. Next is related to your digital payment index. So RBI has recently released the data for the digital payment index for March 2025. What is the DPI? It is nothing but a composite index to track the level of digitization of the payments. How many digital payments are being made? That the sole index for this particular measuring is, if you want to measure this particular thing, then there is a DPI with us, right? So the first DPI was published in January 2021. The base year is March 2018, right? Obviously the base year figure is 100, and as of now, if I talk about March 2025 data as compared to the base year, it is now 5x at 493.22. You need to remember this particular data. You need to remember this particular data. From the last published data for September 2024, it is up by 6%, and if I talk about March, then it is up by close to 10%, right? So this is the trend. So DPI has almost increased 5 times, and this is because of UPI penetration, QR codes, and fintech innovation in our company. So that's a good thing for our country, right? Here we can see that it captures the extent of digitalization of payment across the country. They have given us the data 493.22, and this is driven because of payment infrastructure supply side and payment performance. So there are some parameters. There are 5 parameters for DPI. This is driven because of payment infrastructure supply side and payment performance. Okay. Then if I talk about the parameters, we are having payment enablers, which is having a weight of 25%, payment infrastructure demand side, which is having a weight of 10%, payment infrastructure supply side 15%, and payment performance 45%. So I can say this time the data is driven due to these 2 parameters, increase in these 2 parameters. Later on you can have a look at the key indicators and metrics as well. I have already covered this particular thing in a very detailed manner in a video related to DPI. You can watch that video as well. Customer centricity is only 5% here, right? Next is a speech by the Deputy Governor of India of RBI by the Deputy Governor of RBI. So green finance for net zero goals, right? So in a particular speech, Mr. M. Rajeshwar Rao, who is the Deputy Governor of Reserve Bank of India, has highlighted about the green finance for net zero goals, right? So they have highlighted that climate risk and green infrastructure financing must move to center of policy making now to achieve the net zero target as of now, right? So the economic cost is close to $2 trillion, and in 22-23 alone was $451 billion, right? So this is the thing, and events like early monsoon and extreme weather, this underscores the climate change issues in India. So definitely we need to move to the center of policy making. So broadly you need to study this particular data from the RBI website. You don't have to go into too much detail, and considering the importance of green finance, you need to strengthen yourself on the green finance topic for descriptor. So OECD estimate is green and sustainable infrastructure require 3 to 5 trillion annual until the 2050 here, right? So if I talk about green infrastructure, it is a necessity and not at all a luxury as of now. The World Bank also says that every $1 invested in the climate resilient infrastructure saves $4 in avoided losses here, right? So climate finance gap is overall $2.5 trillion annually. Okay, I'm talking about globally. So again, key challenges are lack of clear definition and taxonomy. Still there is lack of clear definition regarding many things, and taxonomy issue is also there. Technological risk perception is also a problem here. Data and awareness gap is there as of now. People don't have much awareness regarding the green finance and green infrastructure projects. Greenwashing and lack of MRV also here. What do we mean by MRV? Monitoring, reporting, and verification. We are doing a thing, but MRV is lacking. Independent monitoring, independent reporting, and verification system are lacking as of now, and there are some structural constraint as well. Okay. So in this particular article, it was mentioned that building block approach should be there with 2 enablers. First should be internal to financial system, and another one should be external support mechanism. The internal to financial system one is endogenous enablers, and the external support mechanism is exogenous enablers. Okay, so you need to remember of these 2 enablers here. Rest is fine, you can just give it a quick reading and conclude, right? And please do remember that green finance topic can be very, very important for your upcoming RBI Grade B examination, right? Next is RBI draft digital channel authorization direction. This is a draft direction. This is not a full-fledged direction as of now. This is not a finalized direction. However, we'll be reading it in a very crisp manner. What is the objective? To provide a comprehensive regulatory framework for authorization, supervising the digital banking channels. It can be internet, it can be mobile banking. There are so many digital channels, right? So there should be a comprehensive policy for all the digital banking channels. So there should be a comprehensive policy in terms of all the banking channels, stating the statutory and regulatory requirement, plus there should be a responsibility of oversight. The responsibility of oversight should be with the management of the banking institution, right? Remains with the senior management only. So the first criteria is core banking system must be fully implemented. That's obvious. And public facing IT infrastructure must be supported by IPv6. Okay, IPv6. It is a must. And bank must inform RBI within 30 days of the launch with GAICA, gap assessment and internal control adequacy report. So here bank needs to give a report to the RBI, gap assessment and internal control adequacy report. Like, is there any gap? Write it down in the report. And what are the internal controls and are they adequate? Okay. And obviously the transaction banking facility eligibility, you need to take prior approval from the RBI via Prava portal. So if you want just the view only banking facility, there should be CBS implemented, and IPv6 should be also enabled in the public facing IT infrastructure. And if I talk about the transaction facility, then for that you need to take a prior approval of RBI via Prava portal. Eligibility requirement is important here. You need to know the eligibility requirement here. CBS implementation plus IPv6 capability is compulsory if you are going for transaction facility. You need to have the minimum CRAR, plus net worth should be equal to or greater than 50 crore or the regulatory bare minimum, whichever is higher here. Okay, so please do remember this particular criteria. An adequate financial and technical capability should be there here. Okay, these are the mandatory documents. However, you don't have to remember each and every document as of now, because this is a draft circular. You just need to have broader understanding of this particular circular. Okay, so I'm skipping the irrelevant things as of now. Let's do some MCQ practice, and after the MCQ practice we will be quickly revising the part 1. Okay, we have already completed the part 1. This is the part 2. First we'll be doing some MCQ practice, and then we'll be having quick revision of part 1. Okay guys, so let's start. A bank invests in subordinated units of an AIF. Which treatment applies under these new rules? So as per the AIF directions, if the bank has invested some money in AIF which is in the form of subordinated units of that AIF, what will happen in that case? Option A, provisioning only if exposure exceeds 10%. Option B, full deduction from tier 1 capital only. Option C, full deduction from both tier 1 and tier 2 capital. Option D, provisioning up to 50%. Option E, treated same as normal units without deduction. And we all know, we have recently only studied option C, full deduction needs to be made from tier 1 and tier 2 capital. Next, regulated entities often invest in AIF to diversify their portfolio. Under the RBI directions, if the group of regulated entities collectively invest 25% of the AIF corpus, which of the following will apply? Let me know quickly in the comment section. What if we have invested 25% as in a group in the AIF? Okay, so let's suppose Axis Bank and HDFC Bank has invested 25% in AIF on a collective basis. What will happen in that case? What's going to happen in that case? We need to make it to 20% only. 25% is not allowed, so the combined investment should not go beyond 20% in case of a aggregate collective investment, right? Next is, suppose Bank A constitutes 8% of the AIF corpus. So Bank A has invested 8% in the AIF corpus, and later that AIF has invested in a debtor company of Bank A. Which is the provisioning requirement? What will be the provisioning requirement? We all know that over and above 5% in this case of downstream arrangement, you need to make 100% of the provision exceeding the 5%, right? So 5% is the maximum limit that you can invest. If you are going above 5%, then you need to create the provision. So here in this particular scenario, 3% of the AIF corpus will be 100% provisioning requirement for the regulated entity. Next, increase in the number of debit and credit cards issued to customer, rising count of UPI ID and higher adoption of digital wallets by customer. This statement is related to which DPI parameter? This statement is related to which DPI parameter? Any idea, guys? Any idea? Here the correct choice is option B, payment infrastructure demand side. Okay, these things are coming under the demand side. What is the latest RBI DPI value for March 2025? So we all know that it is 493.22 and the base year is 2018. Okay, and this particular question you need to let me know in the comment section. The RBI Digital Payment Index assigns different weights to its components. Which parameter holds the highest weight in the index calculation? Please do let me know in the comment section, and later on we'll be discussing. Now let's do a quick revision of your part 1. Okay, so let's do a quick revision of your part 1 circulars related to your July 2025. We have already covered the part 2 and part 1. Now let's quickly revise the part 1. The first one was RBI prepayment charges on loans direction 2025. That can be important for your upcoming examination. So different regulated entities were having inconsistent practice. That's why RBI came with these particular directions. So Reserve Bank of India supervisory review have indicated divergent practice, and that's what is the main problem which this particular direction is solving, right? So this applies to the commercial banks, cooperative banks, NBFCs and even AIFI, right? And this is applicable only after 1st January 2026. So if you have taken any loan, sanctioned any loan, or renewed it after 1st January 2026, then this direction will apply. And this applies only on the floating rate loans and advances. So let's suppose if loans and advances are granted for non-business purpose, right, to individuals. Let's suppose I'm an individual, I'm taking a loan from HDFC Bank. This is for a non-business purpose. HDFC Bank will not apply any kind of prepayment charges. If I'm paying my loan before the due date, they won't be taking any prepayment charges from me. And there are some other cases as well. So we have summarized everything in a tabular way for the revision purpose. If the loan is to individual or MSE, right, and it is for business purpose, few of the entities from which we have taken is mentioned here. Again, there will be no charges. However, if the loan is being taken by if the loan is taken by the individuals and MSE for business purpose by small finance bank, regional rural banks or tier 3 urban cooperative societies, then in that case, no charges if the loan sanctioned is below or up to 50 lakh. Above 50 lakh, definitely there will be charges. However, below 50 lakh or up to 50 lakh, there will be no charges here. Okay. So please do remember. Then prepayment can be either in full or partial from any other source, and there is no lock-in period as of now. Okay. So these are the basic things that we studied in this particular direction. These are the most important things that I have made you guys revise. Okay. So please do study at least these things. Then again, there was our updation in the credit assessment institution, ECAI. The new institution is CareEdge Global IFSC Limited. We have studied that earlier. There used to be 3 credit rating agencies for the purpose of valuing the risk weighting on different foreign entities for capital adequacy, which is Fitch, Moody's and S&P. Now CareEdge Global IFSC Limited is also there for the transactions for non-resident corporates at IFSC, International Financial Service Center. So please do remember, this is also important. There was a confusion regarding the lending for lending against the gold for agriculture and MSME loans, right? Let's suppose if I'm taking any loan for agriculture purpose or MSME loan, and I'm pledging my gold or silver, even if it is not required, because these kind of loans are collateral free usually, right? So even if I'm pledging the gold and silver, that's again fine. There is no such contravention of these provision. It was a collateral free loan. However, I can voluntarily go for pledging facility. So that's what RBI has clarified here. NSDL Payment Bank was included in the second schedule of the RBI Act. This was the update. Then novation of OTC derivative. Again, this is a draft direction. We have studied this. OTC derivative we have already discussed. These are the over-the-counter derivatives, right? This is not an exchange traded. I have over-the-counter have taken a position with a counterparty, right? So no exchange has been involved in this. We are having three parties: transferor, remaining party, and the transferee, right? So transferor बाहर जा रहे हैं, remaining party के अंदर रहेंगी, और transferee जो है वो नई पार्टी आने वाली है. So this is called as novation. That is something new in the contract. Earlier transferor और remaining party जो थे वो contract में थे. Now transferor is transferring the contract to transferee. Okay. So obviously there is a substitution of one party and new contractual relationship is going to get established. सबसे पहली बात तो ट्रिपल एग्रीमेंट होने वाला है. You need to take permission from the remaining entity here, right? So this will be the cancellation of the original contract, और इसमें नई पार्टी कॉन्ट्रैक्ट में आने वाली है ट्रांसफरी. सबसे पहले तो आपको रिमेनिंग पार्टी का कॉन्सेंट लेना पड़ेगा. दैट इज द थिंग कि सबसे पहले आपको क्या करना पड़ेगा, यहाँ पे कॉन्सेंट लेना पड़ेगा. प्रायर कॉन्सेंट इज रिक्वायर्ड ऑफ द रिमेनिंग पार्टी हियर. देन ट्रांजैक्शन, जो ट्रांसफरी और ट्रांसफरर के बीच में ट्रांजैक्शन हो रहा है, दैट शुड बी ऑन द प्रिवेलिंग मार्केट प्राइसेस, ऑन द मार्क टू मार्केट वैल्यूज, राइट? सो दीज वर द कोर थिंग्स. ट्रिपल एग्रीमेंट होने वाला है, और अगर कोई फीस चार्ज कर रहा है ट्रांसफर ट्रांसफरी से, तो वो फीस का जो एग्रीमेंट होगा दैट विल बी आउट ऑफ दिस पर्टिकुलर ट्रिपल agreement. Okay, this is stated in the third point. You need to remember this thing. Rest is fine. If you know these major things, then that is also fine, because this is a draft circular again. Next is financial inclusion index for March 2025. You all know that RBI has released the data for March 2025. What is the data? 67 is the new data for March 2025. Earlier the March 2024 data was 64.2. Okay, and this particular year the increase is attributable because of two dimensions: usage and quality. Please do remember this. There are three dimensions: access, usage, and quality. In this particular financial year, increase is because of usage and quality, right? So I just want to tell you the weights as well. Access का weight है 35%, usage का highest weight है 45%, और quality का weight है 20%. In this year, usage और quality की वजह से मेजर यहाँ पे चेंज आया था. Okay. Okay guys, that's all from my end for today. We have launched a discount as well, flat 60% off on all-in-one regulatory exam subscription. So this is a great offer. The code is BDAY. You can use this code and get a flat 60% off on all our courses as of now related to regulatory exams. Do avail this offer if you need any mentorship, right? So thank you so much guys. See you soon in some other video. Bye bye. Take care.